Talk to me about Precor's existing portfolio of products. Do those continue on? Do they get branded differently? What does that look like going forward?
Well, as you might imagine, this is a big deal for us. It's 800 employees, $420 million purchase price. So we've been planning a lot, but there's a lot of things to be planned. We have no plans to change the Precor branding. They've got a great brand in their commercial channels. We will plan over time to bring the Peloton experience into that fitness equipment with our award-winning instructors and software, but we're going to be deliberate there and make sure that overall experience, that software, content, hardware experience makes sense. And so we're working through that now, but it has us excited.
And so what does this do in terms of your roadmap, sort of the Peloton roadmap that's been laid out? I know you guys have talked about things like a rower, and obviously you have bifurcated both the tread and the bike and announced that earlier this year. What does it mean for the product roadmap?
It allows us to move even faster. Part of this is their R&D and fitness equipment we think is arguably the best in the industry. They've got 100 people, Jason, focused on R&D, that some of whom have decades of experience in building what we call tier one fitness equipment. And so if anything, it's going to allow us to go faster. And as I mentioned earlier, was a big part. The people were overall a big part of this deal. We really like the people there and think they're very talented.
And so, William, tell me about the supply chain and sort of what you've experienced during this COVID time. Demand has been off the charts. That is reflected in your stock price, to say the least. But you also do have people out there who want a Peloton and are, having to wait weeks, if not months, to get it. How much was that a driver for this deal?
Definitely, as we've been investing in scaling our manufacturing, Jason, and certainly this is an area where Precor is really strong. We have seen a ton of growth. No one would wish the global pandemic on anybody, but it's been tailwind for our business as people are home. Huge growth numbers. And so keeping up with that growth, which has been a moving target, has been a big company priority. And so whether it's the investments we've made in Taiwan before this, we've been investing for years now in growing the supply chain. This is one element of that strategy.
And so when you think about the manufacturing, sort of onshoring more of that, how does the manufacturing mix change? What's sort of the net effect of that in terms of either the cycle of getting things produced or the mix of where things are produced?
It allows us to get bikes and treads faster to U.S. consumers. If you have a supply chain and manufacturing footprint in the trading area in which you're selling, it's super helpful, especially with some of this equipment's heavy. You've got our treadmill; it's over 300 pounds, and so shipping that from Asia, it takes time, especially in this kind of COVID disruptive environment. So it gives us more flexibility. We will continue to produce the majority of our products out of our Asian facilities. We've worked hard to build incredible capabilities there. And so this is it's about growth, helping with that growth. And so there's no mixed target right now.
And as you look across the landscape, it feels like the fitness world, to say the least, is turbulent, a little bit upside down. Boutiques closed, some permanently, some for long stretches, and we don't know whether they're going to come back. How do you look forward into 21, given what you've seen in 2020 in terms of your growth rate and sort of where you see the business going?
We've made no secret that we expect to continue to grow at a really rapid pace. We like people working out. We've said that as a company. A lot of us have taken boutique fitness and sort of came out of it. John Foley, our founder, started the company largely because he was such a boutique fitness enthusiast. And so, we don't take any solace in that. But what it has done is created huge demand for our product. We believe as long as we offer a better experience at home at a better value, which we think Peloton does, that we'll continue to see connected fitness as a secular shift from gyms and other places into the home. And so that's certainly reflected in our growth rates, and we expect that to continue for the foreseeable future.
And in terms of future acquisitions, that sort of thing, this was a big one in many cases. Is there more to be done? Is there more to be bought out there, do you think? Is there more consolidation coming?
We think so. Yeah, we're the leader in connected fitness, and we feel like in order to continue to lead, we have to innovate. We've continued to try to add more utility for our members. For just in the last week, we've announced Pilates is a new content type. So as part of your membership, you're now getting Pilates. We launched things during COVID like Family Fit Fun, so fit family fun for the whole family, stretching and workouts. We've added new software, and so you will see us continue to innovate. And when it makes sense, we will purchase companies, whether it's technology tuck-ins, whether it's teams we like, all in service of continuing to make that membership more and more valuable and higher utility.